Hey, sports card fans, it's John, Boggs Fan. In this episode of Card Collecting 101, I want to talk about how to invest in sports cards. Now, this video is not about short term investing or flipping. If that's what you're into, there are plenty of other videos and channels out there that are devoted to short term investing in sports cards. What I want to talk about is investing for the long term. Now, as a collector, I also consider myself a long term investor. I've been collecting for a little over 40 years, and I have spent a pretty good amount of money in my collection. And it would be nice to know, even though I'm not right now in a position or want to sell my collection or a portion of my collection, it's still nice to know that what the value of my collection is today, that my collection in the future will be valued at maybe a similar amount or maybe slightly more. So while I'm in it for the hobby, the enjoyment of collecting, again, there's still a certain level of you want to protect to some extent the investment that you've put into this hobby. Again, should you need or want to sell your collection. So there are 6 things that I'm going to talk about that you need to think about in terms of investing. The first one are types of investments. And in this section, I'm going to take a look at types of stocks and equate them to sports cards. So the first type of stock are called growth stocks. Now, growth stocks tend to have higher risk levels, but the potential returns can be extremely attractive. Successful growth stocks have businesses that tap into strong and rising demand among customers, especially in connection with longer-term trends throughout society that support the use of their products and services. Competition can be fierce, though, and if rivals disrupt a growth stock business, it can fall from favor quickly. Sometimes, even just a growth slowdown is enough to send prices sharply lower as investors fear that long-term growth potential is waning. So I'm going to use baseball players because I collect baseball. But if you collect other sports, I'm sure you can find similar players or examples that tie into or equate to baseball cards. So some examples here. The first one, Aaron Judge. When he first broke into the majors, was a rookie, huge demand for his cards. Then he got injured, was out for a while. Now he's back. People are still not sure whether he's at his original potential, what his short-term, long-term future is in the game. So I would consider, Aaron Judge cards to be those growth stocks that higher risk but potential higher returns. Okay. 2 players that so far have seemed to be meeting their expectations in their short major league career would be Ronald Acuna and Vlad Jr. Okay. Another example is Shohei Ohtani. Again, huge demand and interest in his rookie cards when he first went into the major leagues. Another player that got injured. He is now having a phenomenal season, both pitching and hitting. But some people think the jury's still out. Like, what is he going to do next year? And is this going to continue throughout his career? How long will his career be? So again, Ohtani cards would be, in my opinion, considered growth cards. And another one is Wander Franco. All right. Franco, I think, recently made his MLB debut. So it's yet to see whether his actual performance in the big leagues will match the hype of him as a prospect. The second type of stock are value stocks. Now, value stocks, on the other hand, are seen as being more conservative investments. They're often mature, well known companies that have already grown into industry leaders and therefore don't have as much room left to expand further. Yet, with reliable business models that have stood the test of time, they can be good choices for those seeking more price stability while still getting some of the positives of exposure to stocks. So, in terms of value stocks, I would equate those to players like Mike Trout, Albert Pujols, Miguel Cabrera, even Freddie Freeman. Those players that have been in the league for 9, 10 plus years. Pujols is, I think this is his 21st season. So more of your modern veteran players that have already gone past the prospect stage, have already built a very good resume for their major league career. Another category I would throw into here in terms of the vintage side would be Hall of Famers. All right. So you have vintage players, they've already set their careers, they've made the Hall of Fame, they're known quantities, established already as some of the greats of the game. The third type of stock are IPO stocks. Okay. IPO stocks are stocks of companies that have recently gone public through an initial public offering. IPOs often generate a lot of excitement among investors looking to get in on the ground floor of a promising business concept. But they can also be volatile, especially when there's disagreement within the investment community about their prospects for growth and profit. A stock generally retains its status as an IPO stock for at least a year and for as long as 2 to 4 years after it becomes public. I think this is pretty simple in terms of equating to sports cards. You have your new rookies and prospects. They would be those IPOs. Everyone is, rushing out to get the rookie cards of this top prospect. And so those, I would equate those to quote unquote IPO stocks. So the fourth type of stock are safe stocks, or what I refer and others refer to as granny stocks. These are stocks that you sort of just buy and hold and just let sit there. Okay. Safe stocks are stocks whose share prices make relatively small movements up and down compared with the overall stock market. Also known as low volatility stocks, safe stocks typically operate in industries that aren't as sensitive to changing economic conditions. So, equating that to the sports card market, I would consider vintage cards falling into those safe stock. But more importantly, within vintage cards in general, more specifically, in terms of graded cards or condition, I would say probably low to mid grade cards and maybe cards of second and third tier Hall of Famers. So in terms of tiers, what I mean is you have your first tier Hall of Famers. Those are the players that are well known in the history of the particular sport, maybe ones that are considered the top 1 or 2 in their particular position. Then you have tier 2 and 3 players, in this case Hall of Famers, that have had outstanding careers, but in terms of hobby interest, may not be at that same level as the tier 1. So if I'm to be honest, probably my Wade Boggs collection and Wade Boggs would probably fit into that second tier Hall of Fame area. Nothing against Boggs. I love Wade Boggs. I personally think he's in the first tier, but in terms of the hobby, I need to be realistic that, Wade Boggs is not put up there with Hank Aaron, Willie Mays, Babe Ruth, Ted Williams. Okay, that's just a fact. So I would say my Wade Boggs collection would be considered a safe stock. So now you have the fifth type of stock, and these are blue chip stocks. Blue chip stocks tend to be the cream of the crop in the business world, featuring companies that lead their respective industries and have gained strong reputations. They typically don't provide the absolute highest returns, but their stability makes them favorites among investors with lower tolerance for risk. So I would say vintage cards fall into those blue chip stock category. But more specifically, again, in terms of condition, maybe the mid to high grade copies of vintage cards and first tier Hall of Famers. Again, the Hank Aaron, Willie Mays, Babe Ruth, Ted Williams, you name it, Ken Griffey Jr., Cal Ripken, those first tier Hall of Famers. But also, it could also be cards from a very popular vintage set. You're talking about maybe 1952 tops, the Gaudi sets, the T206s, all right? And even some of the high series cards of sets from the 50s or 60s. So the high series meaning the last release of cards for that year. Typically, that would fall into the beginning of football season back then. And so there wouldn't be as much of a demand. So the number of cards currently remaining out there of high series numbered cards tend to be lower than the rest of the set. And so even commons sometimes command a premium if they are part of the high series of that set. So again, that's the first thing to think about, the types of investments or types of cards in different categories. The second thing to think about is diversification. So when you're talking to financial advisors, planners, they talk about diversification of your portfolio, right? So you don't necessarily want to put all of your eggs into one basket. Now, in terms of collecting, we all have our collecting focus, whether that's a team, a player, a set, you name it. We all have our particular focus, and that's fine. But in terms of long-term investing, generally speaking, diversification allows you to invest in different areas where one sector or type of card may have more volatility, but you may see higher returns, and another part of your portfolio may be slow and steady, but overall will maintain that value of your collection over time. So again, for me, the vast majority of my overall collection would be those safe stocks, the Boggs cards. But I have my share of IPOs. Opening packs, I've picked up cards of, rookie cards and prospect cards. I have some growth and value cards. I also have a few, small number of what I would consider maybe blue chip cards. So I do have a small diversification. It may not be well diversified because again, vast majority of my collection is Wade Boggs. But again, it's always good to have some sort of diversification in an investment and maybe in a sports card collection. The third thing to think about is risk tolerance. Now, this is not quite the same thing as diversification, but in terms of risk tolerance, again, as an investor, a general investor, the rule of thumb is the earlier you start investing or the younger that you are in terms of age that you start investing, generally speaking, you can afford to take on more risk because you have a longer period of time that if some of that risk doesn't pan out or there's a drop in the market, that you have a longer period of time to make up that loss. And again, if you are still invested in a riskier portfolio, maybe have a chance to not only recoup some losses, but build some investment value. As you get older and closer to retirement, you tend to want to put your investments into less riskier ones because you don't want to risk the fact of being, a few years away from retirement and you have a bulk of your investment in riskier stocks, and heaven forbid those stocks tank. Now you could have lost a very substantial part of your investment heading into retirement and may have to postpone when you want to retire. So again, generally speaking, the older you are, the less riskier you want to be. Now, is that a clear comparison to sports cards? Not really. Okay, age really doesn't play a factor because this hobby could be a lifelong enjoyment. Hopefully, you're not counting on your collection to fund your retirement, although there are some substantial collections out there that some people do think that when they get older, they'll start selling off some of their cards and maybe help fund some of their retirement. But again, in terms of risk tolerance and thinking about investing long term, if you are involved mainly in the growth in IPO cards, okay, those are riskier investments. So you need to understand that long term, there's going to be a lot of fluctuation in the value of your collection, as opposed to the value safe and blue chip cards. Over time, in theory, your investment in your collection will either maintain its value or slowly grow over time. The fourth thing to consider is quality versus quantity. Now, again, relating this back to stocks in the stock market, there are two ways that you can invest. You can buy stock of individual companies and say own stock in 3, 4, 6, 10 individual companies and ride your hopes on the growth or the performance of those particular stocks. Or what you can do is invest in a mutual fund. And a mutual fund is made up of a multitude of stocks. Some of them have different risk portfolios, industry portfolios, so you can invest in a mutual fund of a certain sector of the economy, or a growth stock mutual fund, or a blue chip mutual fund, or an IPO mutual fund. There's various ways to do that. But that comes back to quality versus quantity. I know there are some collectors out there that have a smaller collection but are made up of extremely awesome and valuable cards, versus me, who has a lot of cards in their collection. And I know there are some that even have, huge numbers of cards, even beyond what I have. But the more quantity you have, again, the more opportunity that you're spreading the risk that you have within your collection, even with a focus collection like mine of Wade Boggs cards, versus only investing or collecting in a small number of cards. Again, if they're the IPO or the growth types of cards, and you only have a small number, again, the chances of that investment, so to speak, is riskier long term. Versus if you have a large number of cards in your collection, then the odds of your investment long term to take huge swings up or down is a lot less. The fifth thing to think about is raw versus graded. Now, I did a video called Sports Card Grading, the Good, the Bad, and the Ugly, that I take a deeper look into the issue of raw cards versus graded cards. And if you're interested in watching that video, you can take a look at it up here. But briefly, whether you are a fan of grading cards or not, there's always going to be a market for raw cards. There's always going to be a market for graded cards. Right now, in terms of investing, long-term investing, you're still going to have a value to your raw card collection. Okay. So I'm not saying go out there if you want to invest in the long term. I'm not saying go out there and get all your cards graded. But in terms of the return that you may get or the value of your collection, the general rule of thumb is if you have a card that is graded, and again, in my other video, I talk about sort of the reason why grading is popular and deals with the values of cards. You're probably going to get a higher price for a graded copy versus a raw copy. But again, if your collection consists entirely of raw cards, and I would say the bulk of my collection are raw cards. I do have a small growing collection of graded cards, but I would say I would fall into the first category of raw. So does that mean my collection is worthless? Absolutely not. But I also know that maybe for some of my cards, that if I had them graded, it would add to the value of my collection currently, because values of graded cards, even regardless of the grade number assigned to it, would sell for more than the raw copy in a similar condition. Okay, so the sixth and last thing to consider is constant investing. In other words, don't try to time the market. For those investing in stocks and in a particular stock, so someone that wants to invest in Microsoft or Google or you name it, all right, it's called dollar cost averaging. And you can do that with mutual funds as well. And the theory behind that is regardless of whether the stock price or mutual fund price is up or down, you want to constantly be buying into that investment. So that over time, yes, at one point in time, you may be buying that stock at its high, but another time you may be buying it at its low, rather than holding off on the sidelines and saying, well, it's still too high, it may go down. Well, it may go down, it may go down. Is it too late, or did I miss the high? Did I sell, too early, too late, things like that. So for long-term investing in terms of sports cards, it's more like constantly add to your collection. Now, I know there were a lot that started to go over to the sideline last year with crazy prices out there. And I have to admit, with the limited funds I had, I didn't buy as many cards as I probably would have with the same amount of dollars because the cards cost more. But I was still adding to my collection. So I have a monthly budget that I invest in cards, whether it's Wade Boggs, whether it's vintage PSA graded Hall of Famers, whether it's some new packs, retail packs I find that I want to rip open, whatever the case may be, I'm constantly adding to my collection. So I'm investing into my collection on a consistent basis. So yes, I may have bought a card back, or you may have bought a card back in, say, June of last year, that you're looking at what you paid for it back then and what maybe you can get for it now, since, the sports card market has sort of, I don't want to say maybe the bubbles burst, but there's been a correction. All right. Some cards out there I've heard of have, taken a 50, 75% hit. So short term, you may be thinking, oh, geez, I way overpaid for that card and all that stuff. But if you're thinking long term, chances are, depending on what type of card falling into that stock comparison, long term, chances are that card will eventually get back to what you paid for it. And again, if you hold on to it long enough, may even exceed what you paid for it. So, constant investing, don't necessarily, I don't worry what I paid for a Boggs card and see what it goes for 5 years from now. Would I like to have it be worth more 5 years from now? Yeah. Would I be extremely depressed if it's a little bit lower? No, because one, mainly I'm a collector. All right. I collect for the enjoyment of it. But again, this ties into wanting to know that the money that I put into my collection hopefully will remain in there as long as I have my collection. So that's what I had for you. 6 things to think about in terms of collecting and investing in sports cards for the long term. I hope you enjoyed this video. If you did, would appreciate hitting the like button. That's all I have for you. As always, thanks for watching, and I'll see you next time.